Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Monday, March 17th, 2025. Let's take a look at the charts. I will start with this one, plain and simple. We did close after opening also last week below the 258.99 two-year channel bottom. That stems off, you follow the sequence off the highs following that January 23 low, first high. And then you've got the pullback low. That was, I think that was April of 24. And then we've got the big rally. And so this is still our ceiling, 258.99, able to contain buying not only for the week, but even through April, and below which the 154.05 to 160.15 5-year channel bottom remains, a 1 to 2 month target. We may see that sooner, but I think somewhere in the 1 to 2 month range is likely. Holding below 258.99. I'll cover the upside a little bit more in detail, but if you were to look, here's some kind of downside levels, holding below 258.99, still expecting 212.11 over the next week or two. We did come relatively close to testing this early last week. It can contain session weakness. It is a meaningful pullback low, as you can see, from October 24, but once again, it is still the low 160s that we're ultimately anticipating. And if we were to close below 212.11 over the next week or two, we should, over the following week or two, continue south to 175.85, which is a long-term wave count on the weekly chart. Do I show it anywhere? Yes, I do right here. You can freeze frame if you like over here, but it's kind of an A, B, C, D full wave count to 175.85. Yeah, if we hit 175.85, I see that as the beginning of a zone to cover any long-term short you may have in the market and to go long-term. Holding above 154.05 or once tested, you can make a solid case for still vital Tesla stock to trade, spec trade, invest in. We can rally back into the upper 250s and climbing within 1 to 3 months of doing so. I would expect then some sort of a longer term consolidative process before then continuing higher, perhaps as we move into later year or into 26. I will say, just frankly, that if we were to close below 154.05 at some point, that channel bottom, I do see the stock, Tesla, kind of fading into oblivion as a tradable entity, and in fact, as a company in and itself. But I don't want to get too dramatic here. That is just sort of the bottom line, the way I see it. Talking downside, today, we do have a very short-term channel bottom at 232.34. That is a solid day tradable level. You can buy into it ever so carefully because we could get a nice bounce from here. Bounce to 258.99. I don't know. That is a possibility. We do have minor points working our way up. We want to keep a fair amount of breathing room, but 251.84 was Wednesday's high of last week. That was the move high following the low a day earlier. And 253.37 is nothing more than, if you go to the weekly chart, last week's high, the high on the weekly chart. So these are both, areas where we could top out intraday. But really, if you're looking for kind of the day trade, it is buying 232.34 on a dip. Now, keep in mind we are bearish this stock as we move into April below 258.99. So be careful getting along aggressively. I think if we break 232.34 today, Monday, we could actually test 212.11 intraday. That's not a stretch, especially if we open much lower. We open at or below 232.34. 212.11 is in reach today, where we can place a daily low. Now, holding above 232.34 will keep over the next day or two this 258.99 level in reach. Upside, if we close today above 258.99, 282.69 is likely within several days, where we can place a daily high possibly top out through the rest of the week and fall away. Now, under that scenario, we'll be watching closely to see if, once again, we close the week back above 258.99. And if we do close this week back above 258.99, then everything shifts back into the bullish column, at least near term. And this is the chart I would like to show. So closing the week above 258.99, I have a 2 to 3 week buy signal to 315.64. It is very stair-step on the way up. 315.64 can contain weekly highs. We could even fall away from here. In terms of, can we expect longer term recovery above 258.99? I mean, it is certainly possible. I could see perhaps the 340s maybe within a month or two. And I don't really want to go there. The way I really want to map it out, and I think most of you are in this sort of framework where you're either, day trading, 3 to 5 day swing trading, or 3 to 5 week swing trading. I'm comfortable anticipating 315.64 above 258.99. That is a pretty classic descending channel top that may contain more than just weekly highs, may actually contain buying through the entire month of April, and we could fall away again from there. So that is a viable trade in and of itself. Closing above 315.64 would, however, then signal another 2 to 3 week buy signal to 391.13. This is a descending 2/3 speed line that is also correlates pretty well with the 5/8 upside Fibonacci. And that could contain weekly, possibly monthly highs. In terms of anticipating a possible approach, once again, of that 509.06 5-year channel top, I'm not comfortable indicating that as an objective at all unless we can close above 391.13. And we are a month, 2, 3 or so, at several months from testing 391.13. It's going to take a lot. And this is, I'm just kind of spitballing here, but I think there's truth to it. That following this parabolic rally and the fact that we gave it all back on the backside almost as quickly as we gained it, these church steeple rallies, I call them, they are oftentimes longer term highs. It can take a lot to recover out of this. That's why I think we are likely to fall into the 150s, 160s over the next month or two, and then spend a fair amount of time consolidating. During that consolidation period, there will be plenty of 3 to 5 day to 3 to 5 week swing trade opportunities. But in terms of a longer term portfolio, even if we close above 258.99, I could see a 2 to 3 week pop to 315.64 as I outlined earlier, and then we could get into trouble again. That 315.64 descending channel top, by the way, does correlate, or will, I should say, correlate not long from now, over the next week and a half or so, with this high that was put out in 23 at 299. So, if we close above 258.99, I see 315.64 likely within a week, 2 or 3, before we run into trouble again. This is not going to be, in my opinion, a V-shaped recovery. We've already got a V-shape to the downside. And so that is likely to have some degree of say-so in terms of the sort of momentum and directional dynamic that we can anticipate from Tesla in the months ahead. Holding below 258.99, expecting the 150s, 160s still over the next month or two. Anything I say beyond that will be repetitious. I do want to mention that last week we put out stock picks on both Home Depot and Google, or I should say Alphabet. They're both very tradable entities right now. They're both approaching significant levels. So go to wickedstocks.com. Check out our 5-day free trial. You'll be able to see last week's stock picks. This week's stock picks will be released, Tuesday and Thursday. You'll see daily triple Q, daily SPY analysis. They're both approaching significant levels. That's a broader market representation and very tradable entities, SPY and Q. Weekly Apple stock, testing a significant area right now that you might want to check out for free, and weekly S&P 500 and NASDAQ 100 analysis. That is all I have. I'll leave it at that for Monday's Tesla. You have a great day.